we're starting to go back out. Oh my god, I'm getting phone calls. B is saying QANX breaking out. Let's have a look. Oh, nice. I like that. Look at this. That's what you want to see. That's exactly what you want to see. You want to see strength. You don't want to see weakness. You want to see strength. Yeah. So perfect. That's perfect. That's what I'm looking for. I'm looking for a sign of strength. Yeah. When you see strength, then you can make a plan to enter. Look, this is the problem. I think it's good. I think it's really good what's happening now with QANX. Get rid of these brush strokes now. It's all wrong. So I have a long trade plan idea based on strength, but I want to see this level flipped into support, this monthly level. I want to see acceptance above this level. Yeah. Before we got above this level, lost it. This time we couldn't get through it. Now we've closed in the 4-hour time frame above it. That's a good sign. Really good sign. And also, what I was saying was I want to break this pattern, this kind of down pattern. I want it to be different. And what I'm seeing now is the first signs of life, the first signs of difference. Perfect. Yeah. So this is naturally something I'm interested in now. Look at this. This is interesting. Let me have a look at this moving averages. I like the higher low. My original idea of an SFP trade here is still in play because it's come back up and it's held a support. It was my original idea and it's still in play. So I didn't take the trade, but the idea is still in play. I've just updated this value area and oh, yesterday was a bullish day. Look, it came back into the value area low. That's good. And now we're having a push up. Would you long? I like to long back tests of support. I don't like to long just like that. So let me have a look and see if I can find some kind of... I'll delete these now. There's a big injection of volume there. I like that. Someone FOMO'd in, market bought. Let's see if there's follow through. That's my first. Now I'm looking for follow up. Yeah. Would you just long? No. No, I wouldn't. I want to see a reaction here of this line. I want to see this hold support. I don't mind longing as the price goes up if I see this holding support, because then I have an invalidation. Does that make sense? Yeah, because then if the price does that, I'm out. and that's my trade. And it wasn't a strong move. I took a chance and it didn't work. Yeah, but if this is a strong move and this is the beginning of a move, then this will hold. It will. So I want to see it hold. How people are going to sell into it. I want to see if people sell into it. And I want to see. I like that this closed higher. I like the close. So we've closed higher now. See that? That's really good. That was a good close. 12-hour chart. I haven't seen that behavior at all in this whole down range. So that's a difference in behavior. But on the back test, 21 to 22 cents. I'm going to the most bullish situation here is for enough volume to come in at the lows here that point of control flips to the lower part of this range, which hasn't happened now. So naturally speaking, if people are accumulating in this downward motion, then their first significant take profit or exit is going to be back at the point of control. You have to bear that in mind. So there's no way you'd be holding beyond that. Doesn't make any sense. That would be crazy. I think that would be really crazy to do that. You have to take profit at the point of control because naturally people will sell into it. And the best way to do it is to set limit orders. Got a little bit of a rounding bottom here. I think a little bit of consolidation here will be good. Like a reaccumulation above that level if it holds. And if it doesn't hold and we go down again, then if you're looking to enter, you have an invalidation now because you have the golden pocket and you have this low. So you could potentially back at the value area low one more time. You could try and catch that. You have your invalidation now. One second, I just put something on. Yeah, there's a bit of a gap there, huh? Look at that. B is saying, what's a volume gap? Interesting. Let's see that level hold. If it doesn't hold, then we'll probably just range here for a little bit longer and try and get out like that. Probably. And maybe we can form higher lows and try and get through that level in a bit more of a like a flat top triangle or something like that, if we can't get through. You have to see what happens. Like ideally what you really want is this. Yeah, you don't want to buy into the pump. You want to buy into the back test on a reaction on a SR flip. That's what you want, because then you have an invalidation, right? So right now you wouldn't long simply because your invalidation is basically here or here. And that's the problem with longing now. So of course, if people were bullish, they could have longed down here, had an invalidation there. Of course. They'd be in good profit now. They probably would have taken profit by now, just because we're into resistance. So you have to take profit if that's your trade. The reason why I wouldn't have taken that trade is because look how many times these wicks were, the liquidity was taken from these wicks. Look, like which one do you pick? You know, you can have a trade plan and you're going to get invalidated every single time if you have a trade plan like that. So which one do you pick? You know, you're going to get invalidated. So obviously people were still attempting to long and have that same invalidation every time moving the wick down. That's fine. You can do that. The way to create a trade plan in order to make the trade successful like that, you'd have to increase your position size to compensate for the loss. But you can only lose like X amount of times in a row before you wipe out your whole account. So it's not necessarily the best strategy. It's better to just risk 1% each time, but take the highest probability trades and then take your profit. I want to see more volume. I can't really see much volume. That's the other thing. I want increasing volume. How much volume was that candle? 1.6 million. Is it 22 cents now? So that's the $352,000 traded in that, in this bet here. That's quite a lot. That's quite a big buyer. I wouldn't be surprised if we don't hold that level though. I wouldn't be surprised. I'm not saying this is bad price action. This is kind of what you want to see. You've clearly reversed the downtrend of this 4-hour time frame. So on the 4-hour time frame, lower high, lower low, lower high, higher low, higher high. See that? So you've clearly reversed it. All you need now, no, that's it. Lower high, higher low, higher high. Higher high, low, lower high. Higher low, higher high. Go for it. Go for another higher low. I think that would be the 4-hour time frame. But you've made a higher high now, which is kind of what you wanted to see. So this is your higher lower low. That's your lower high. No, I've done this wrong. 1 second. Lower high, lower low. Yeah, that's your higher high. This is your higher high. So we've just made a higher high. Is that Garley? 1 second, I want to see what this is. I can see a harmonic here. I'm not good with harmonics. Butterfly. It's a bearish butterfly, I think. I don't know. I don't know because B is quite low. The C is above the A, correct. The X, the D is above the X, correct. It's quite a deeper B though, so No, it's not a Gartley, because a Gartley wouldn't have made a higher price. Maybe it's really that pattern, yeah. It's not a Gartley. So it's a bearish butterfly. That's the one I'm looking at. It's not a bat. No, it's not. It's not a shark. C was higher. I can't like, I'm not, again, it's all subjective, but to me, that's looking like a bearish butterfly. And the way you know, this is the trade really. You could short that. You have your invalidation now. It's the D. If this harmonic is in play, then you could short that. Basically, you have your invalidation now. If that's the D. But it's not a good entry to sell the lows. It's better to wait for a pullback. But I mean, these illiquid tokens, you might not get it. That's the problem. With Bitcoin, you'd wait. You'd have to wait, because Bitcoin you'd probably get a pullback to test the high one more time, some kind of liquidity run or something. This should be safer. Lose that monthly level and then short. You have a smaller invalidation. This kind of short, you'll be targeting this low here, this C. That would be my first target. And then you could long that with a swing failure. And then what you'll end up doing, you'd have to take profit at the golden pocket. And probably there's a range now here. So let's have a look. Yeah, so the correct short here would be to get acceptance back into the volume area, and you'd also be losing the monthly level, and then you can short. That would be a short. You can have you don't have to have a crazy high invalidation, because once you're back into the value area, you know, you're back in the range. And then but I mean, look, you could also long this as well, and that's the thing. We're at a really decisive place. If you lose this level, you short. If you hold this level, you long, because it's a key level that you want to flip into support, but you need an invalidation. So that's the problem with the longing right now. What's the invalidation? And with shorting, you need the same thing. You need an invalidation. So whatever you do, the first question to ask is, what's the invalidation? And it's really good when you have these key like horizontal levels, because you have an easy invalidation. It's if you're above, you're long. If you're below, you're short, basically. So these horizontal levels are the best ones when it comes to easy invalidation. This price action is looking very weak, by the way. So we have to see what happens. We have to see if there's follow through. Naturally, the most that where is that point exactly, you're asking me? Well, I just look. It's quite messy, yeah. The chart's a bit messy, but there is a level, there is a range here. There's like a divide, yeah, and it kind of gets above it but loses it. So I did a range pull from basically when it came into this lower part, and then the volume that's been put into this whole lower part is kind of just one whole range. That's what it looks like. It's like one big mess, right? And based on that, the volume area, the value area, comes above this monthly level. So the monthly level, which I got from on the monthly time frame, from the bottom of this red candle and the body of this red candle and the bottom of this green candle. That's the monthly level from there. And so I have this purple line now, which is my monthly level, and that corresponds with the value area high of this volume range. So I know there's something there, and at the moment it's good because we're above it. Two two 2258 thereabouts. price settles here for a while, that'll be quite bullish. Need to see what happens to the price. People stop selling. They stop selling now, and the price could settle. It'll probably go up, but it may be sold into again. So this, you might get a situation like this where you have another opportunity to sell with a smaller invalidation. If you're going to trade that harmonic in the higher part there, it could still do this. You see, you have to be careful. And so naturally, I just want to see more. I just want to see this level hold. Actually, I just want a bit more higher time frame confirmation. I want to see some acceptance into this higher level. You can take it, then you can take a long, and you can take a long, but you still need an invalidation. And so, yeah, you see, this is good. Just whatever you do, you just need an invalidation. That's all. Yeah, as long as we're above it, we're bullish. And then we go below it, we're bearish. That's not good. That was sold into immediately. That's not good. It's a shame we went up to here and not higher. Like I would have wanted it really to go up so that it would be better. That would have been better. To just go up and clear the liquidity, then have a nice pullback to the monthly level. Just coming up to it only so slightly makes me think we're probably going to go down. We'll see. There's a big market buyer. Someone just market bought. Yeah, I think you've got to be careful with this price action right now. Quite simply because you've had a market buy. I don't know why someone just bought like that. It doesn't make any sense to me. You want the market to buy. You don't just want one person to buy. And the market doesn't buy like that. Not unless it's going to break out of some kind of in an impulsive move. I don't know why that person just market bought. They should have just limited in and exhausted the sellers. That would have been much healthier for the price action, because now you are forming this like a bearish pattern. Now you've got a 4 hour, that's a 200 moving average. Yeah, I mean, if you get a close back underneath that level, even back underneath that 200 average, that's pretty weak if that was to happen. But you are coming back into support. I mean, the range isn't much. You'd be coming back down like another 10% before you come back into support again. That's the thing. So it's not like a crazy short. It's not like a short of the ages. It's not like a short that's going to go down a million X short. But it does allow people to sell and reaccumulate lower. This kind of price action. I'm not feeling, no one can predict the future, but I can't really see continuation with the impulsiveness of this buy. It was like one big buy. Someone took profit. You can see there, these two volume candles. Another person took profit here. And I'm not getting crazy continuation with this price action at the moment. Here someone was buying, market buy, and that was like, I'm buying, like a big buy. And they just wanted to fill their bags. They didn't care about the price. So naturally, that kind of price action suggests that someone doesn't care about getting the price at 12% higher, because they value the project more than that 12% that they're losing in the bag size that they're accumulating with. And they may have a really big bag, and this is just a small fraction, and in the scale of things, it doesn't matter for them. If someone has a really big bag, this might have been a small buy for them, and they were looking for, in the whole of this down move, they're looking to buy. They got the right kind of signal for their own analysis. Maybe it was this 12-hour engulfing candle. It was a very strong reversal candle, this 12-hour candle, because look, it's engulfing a previous candle. And so someone was like, okay, I'm okay with that candle. I like that candle. I'm just going to buy it. And someone just market bought that candle, which is yeah, I think the entry now, like a really good entry, if you really wanted to enter now, of course you have to see if the price is going to hold this monthly level, and that's going to be based on diminishing sellers and people who are looking, like, see, the thing about people who are looking to long, like myself, is you want to long, but you don't want to long if this is the end of the buying. You want to long when it's the beginning of the buying, and then also you want to long lower. Like, people who are going long, they always want cheaper prices. They're always thinking lower, right? I mean, I'm not talking about people with FOMO. I'm just talking about people who are looking for positions. So naturally, I think the right place to buy again would be back at the point in control now. If you take it from this pivot here to this D, the point of control comes back into the golden pocket. Now I'd be interested to buy there, and then your invalidation is the low back down here, potentially. That would make more sense to me right now. Lower. You'd still have to take profit at the monthly level, but then you're looking to long here to take profit there. It could go down or it could go up. We don't know what it could do. That's why you would have to take profit. And if the price, and then you can see how strong the price action is, because if the price action is if you have a lot of interest, then people who want a long will prevent it from coming to the golden pocket. They'll be buying the value area high. That's how you're going to know if there's a lot of interest, because people will be looking to buy higher. They'll be looking to get in now. They like the price action. They like that the price went up and someone bought, and they're looking to get in now. So it depends. So if it finds support here, that's more bullish than if it finds support here. And obviously if it finds support where we are now, that's even more bullish. So the higher after you get this kind of a move, the higher the level the price finds support, the more bullish the move is. And those flat corrections are really bullish, because then the price can do that. Yeah. So you have to see, and it's that would be better, because then you're on, you don't really have much resistance in the way. You'll be going to the next level, which would be right up there in that point of control at the top. But obviously if you end up buying down here to come up, you have to take profit there, you know. And it's the same with if you buy lower down. If you end up going lower down, you end up having to take profit at the value area high, just in case it does this. It's always the same. I mean, it's still holding. It's still holding. You just have to see if the sellers get exhausted or not. This is a bearish MACD divergence. See that? Higher high. Lower high. You got a bit of bearish MACD divergence. Yeah, it's not looking great, to be honest with you. It's still there, but it's it's on the edge. It's still there, but it's hard to know because we're still above support. Oh God, look at that market sell. Market sell right there. Just now. There you go. There's your market sells. Oh, there you go. Now it's coming in. Bit of volume. It's a shame. Now, if you get a close underneath, one more close on the 30, you get like 2 30-minute closes back underneath the monthly level, then that's like, this is a failed auction. So right now it's looking like a failed auction, but you need 2 30-minute candle closes underneath this monthly level to confirm it. You need 1 and then 2. So basically by, according to the UK time, by 2 p.m. we'll know. Clearly someone is selling. Look, see that? It's a market sell. It's not healthy. And the reason why their market's selling is because no one's buying. So the only way to fill their order is to market sell. That's the problem with market, with the price action now. You're getting a little bit of a pullback. That's not bullish. That's normal. Because when you're market selling or buying, you're creating volume gaps, and then the price tries to come back and fill those gaps first before it continues in the direction that it was initially traveling. Yeah, I mean, look, there's a little bit of volume there actually. Look, 5,000. The sell was 10,000, and then someone bought back half. And what you end up doing is you're creating these higher time frame candles with wicks underneath them. It looks bullish, but they're not. They're bearish, because they indicate market selling or market buying. And the candles, like these candles with the wicks above the candles there, that indicates market buying. Yeah. So someone is actually now just selling into the rises. There's a little bit more selling going on. Yeah. All right, that was fun. We'll have to see how this plays out. If this harmonic was a good harmonic, it looks like it's playing out right now. Good we caught that, huh? Caught that in the nick of time. That harmonic prevented me from getting bullish. It prevented me from longing. Even though I was planning a long there, you know, I was thinking about it. But that's why you have to see what you've got to let the price tell you what's going on. You want to see a bit of bullish divergence, a little bit of a consolidation above this level, reclaim it. This is not the price action that gives me confidence, where we've just gone above it and then a few hours later we're just down below it again. This is giving me confidence to long. I don't want to see that kind of behavior, price action. And I don't necessarily think it's bad to long though. Like, look, I like it, like on the higher time frame. Well, let's see how this daily candle plays out as well, because that could be quite, we could end up with a bearish daily candle. We have to be careful. And I think what I said in the previous update was I do really want to see a close up here. I don't want to see a daily wick where the price is just sold into, because we've had wicks before and the price has continued going down. And so by the end of today, I think we'll know what's happening. And we have to see how aggressive this selling is. And we have to see if this person who bought a large amount, like really, if he wanted to continue, he could that's the thing with these market buys. You know, a lot of people are sitting around with a lot of capital in the sidelines. They buy once and then they start buying, you know, they could buy again. And so you will know what happens. Now, if you get, this wouldn't look good, actually. if we get the whole of this volume reversed with a candle close underneath this candle, that would look ultra bearish, because you've put in so much volume and the price has still ended up lower. That's not good. That's not what you want to see. And it also indicates that the person or persons who did buy did not defend their position. They've created a position now for themselves, and naturally speaking, you'd expect someone with a large amount of capital like that to want to defend their position. So as the price comes back down, they may look to be market buying one more time, just push the price up again, take more liquidity, and again, you know, that's kind of their psychologically, that's what they're thinking possibly, and so they're possibly waiting for a pullback to just keep on doing that. It's not the right strategy. The right strategy for a whale would have been to market buy and then just put their limit orders at the monthly level here and just absorb the price there. That would have been much better, because you need time to take out the downward momentum. You can't just by impulsively going up isn't going to change the momentum. It's the closes at higher prices that changes the momentum. It's really important to get as many closes as you can at higher prices. And strategically, if you want to turn a downtrend or create an uptrend, you need longer periods of time at higher prices. That's basically how it works. And so these kind of market buy and then dump, they're not actually constructive for the price, especially if you're forming a higher time frame candle structure and patterns which are bearish. You know, they're not constructive. They're actually, it's worse. It's better. It would have been if it would have better to just consolidate down here and go flat before an actual real impulse, and this moving average would just flatten out. So we have to see how this plays out, but I'm not crazy about this price action, to be honest with you. The thing is, who cares if I'm wrong? I'm not like trying to be right. I just don't want to be wrong. And in a trade, that's the point. Yeah, like if I can be talking about the price and I can be wrong, that's fine. You know, no one is 100% right, but you don't want to be in a trade without an invalidation and then wrong. And that's fundamentally the problem. So I was looking for a long here, but I had no invalidation. I was looking for an invalidation. And if you don't have an invalidation, like, where are you going to take the long? Where's your invalidation? That's the problem. We're taking, like, I was looking for a long, but I was offered no invalidation. Yeah. Now, if the price had gone back above here, then I could have possibly longed with an invalidation down here. You know, because now I have an invalidation, and my invalidation is market structure or some kind of bullish candle into the low of this range, because then I don't expect the price to continue to go down if I see that kind of structure forming. And the problem, like, I don't mind taking along slightly higher up as long as I have a definite invalidation of my trades, so that if I'm wrong, I'm out with my calculated stop loss, which is a maximum of 1% of your trading portfolio on this token. Yeah, so you're only risking 1%, but you don't have to go much of a distance to make your 1%. And then with the remainder, you can make more than 1%. So these kinds of trades are really profitable, because if you get it right, to get it right isn't that difficult, because all you need is an invalidation and you need the right kind of behavior to enter. Then it's quite easy to get 1%. it would have been quite easy if this had formed like that and take a long there. It would have been easy for the price to go up for me to take my 1% and have a risk-free trade. You know, there's a high probability in that kind of action, as long as you're buying and selling in the right areas after you're looking for the right kind of price action. Yeah, and then all you have to do is increase your account size by 1% every trade, and eventually you're compounding the gains, and so eventually your account size is just continuously growing. But the way to trade is the same. It's always the same. You need an invalidation, and you need to only risk a certain amount, and then you need to take profit quickly. That's really fundamentally how it works. And eventually people will just get into that kind of rhythm of taking trades. Yeah, look, we said it was bearish, and it was. Look at it, it's just, there's no interest. And so I think now that we've gone above a level and lost the level, we've taken liquidity from this wick here. We haven't taken liquidity. Oh yeah, we have, just literally by a penny or something. We've taken liquidity from that wick there. That's pretty bearish, actually. You know, that's not what you want to see. Technically, the trade was to short the SFP up there. Technically, like if you really wanted a short, I hadn't planned it, so I wouldn't have taken the short. But a planned trade or a planned short, if I was looking to short, would have been a swing failure of that level. Or that level, if you planned it, and then when you look at the lower time frames, you see, well, this one you wouldn't have been able to take because it happened so fast, literally. But when you come back down underneath this level, the invalidation is that swing failure at the high. It's a pretty big invalidation in my opinion. I don't like those invalidations. They're too big for my liking. But yeah. Get rid of these moving averages now. Let me have a look at my other indicator here and see if it's telling me anything. Let me get rid of my harmonic now. Where's that one? Those lines on this ranges. Oh, that's looking really bearish, huh? What the hell? Crazy. Did you sell? B, did you sell? I hope you sold. All right. I think that's enough of this. Am I looking for a long? We could get long We could, I mean, you'd expect the level to be tested a few times for a break. If we're about to reverse, if this is the beginning of a reversal, then you'd expect the level to be tested a few times. But I don't like this price action at the moment. I'm not a fan of it. This is interesting. So we are in this value area low of this whole upper range. Okay, so this is actually not that bad. Like, I don't want people to get bearish just because we had a little bit of a rejection from a key level. Yeah. Basically what you're experiencing now is trapped liquidity being cleared by a market buy, right? And so naturally what that means is that someone was long from higher up. They were longing, and this is the first opportunity that those people have been able to get out and break even. Yeah, and they'll take it. They'll take it. If people are spot buying and then their trade goes wrong, then naturally their trade plan is to exit on break even. Does that make sense? And so that's what you want to do. You want to clear the liquidity, and this is how you clear it. But I am actually thinking now two things. What I'm thinking is, let's hold the value area low with a back test. I think that's what I want to see now. Like, based on what I'm seeing, this is the value area low. I think let's just hold it. Let me see the price hold that for sure. And so you've come back into it, and then you've had this kind of impulsive buy, which is normal. Let's come back in. Let's just hold it, and maybe we can then look for a long, and then also maybe, yeah, that's coming in the golden pocket of this pivot. See that? So you have the value area low, there. Maybe we can form a higher high, a higher low here. Come into the golden pocket. Form support and go back up. Another attempt. Go up for another attempt. You could be forming some kind of this could be forming some kind of rounding bottom here. See that? That is possible as well. See that? So whatever. You get the idea. If we are forming some kind of rounding bottom like this, then surely we don't want to make a new low here. So if you are looking to take a long position, then probably you'd have a, I like smaller invalidations, so I prefer the price action to react so that I can have a much smaller invalidation. Yeah, I don't like these like limit long large invalidations. Let the price react, enter a little bit higher up, have a much smaller invalidation, because if this kind of behavior is forming, you're not expecting it to go like that. You want to get invalidated very quickly. We don't want to wait for that. But if we are forming this kind of like a rounding bottom now, let the price come into the golden pocket, that's going to be the value area low of this range. Get a bit of a reaction, golden pocket. So it goes up, take the long, have a small invalidation. Let's have another attempt at taking that. Maybe we're going to go up again, you know, who knows. That's kind of my trade idea right now. On a long, I think short we had the best idea. Didn't take it, but that was it. I just made that up. Look at it. So basically that was the idea. Okay. Right. What else do I want to have a look at? Well, let me have a look. Let's see what's in.